Hi everyone, welcome to Wally Global. In today's video, we're diving into a big question shaking the markets. Can Donald Trump actually fire the chair of the Federal Reserve? We'll explore the legal limits, economic consequences, and what this means for the future of US monetary policy and global investor confidence. If you enjoy clear and concise analysis of global affairs, don't forget to like this video, subscribe to Wally Global, and hit the bell icon so you never miss an update. Feel free to share your thoughts in the comments and forward this video to anyone who'd enjoy thoughtful insights on international events. Let's go to the video. Trump threw another tantrum, now because the Federal Reserve has not cut interest rates, so he said he wants to fire a Fed chairman Powell, threatening the independence of the Federal Reserve with a history of 100 years, scaring the market, whether it's US stocks, US bonds, or the US dollar, all fell, and those funds rushed to safe assets. Why is the market so afraid of Trump firing Powell? If it happens, what impact will it have on stocks, bonds, and foreign exchange? And where did these funds go because of this event? First, let's talk about what happened. Last week, Trump attacked the Federal Reserve Chairman Powell again, saying he was too late, calling others a major loser. What he meant was that Trump thinks there is no inflation at all now, so why hasn't Powell cut interest rates? Europe has already cut rates 7 times, so it's obvious that Jordan Powell is playing politics. Then Trump wanted to fire this Federal Reserve chairman. After this news came out over the weekend, the market was very worried and in an uproar. Then Trump came out to clarify, saying he actually wouldn't fire Jerome Powell, but with him changing his stance so quickly, he could change back at any time. If he really did fire the Federal Reserve chairman, what impact would it have? Actually, Trump has said many times that he wanted to fire Jerome Powell. He mentioned it when he was president for the first time, but the market got used to his random statements. So previously, whatever he said, the market would ignore. However, since the open day on April 2nd, he really waged a tariff war on the entire world and even increased China's tariffs to 60%, then to 80%, and then to a certain percentage in the 80s range. The market realized that when he goes mad, he really follows through. So this time, when he said he's considering how to fire Powell, investors are worried that he really might do it. But why would firing Jerome Powell be such a bad thing? Is it because this chairman is so capable that without him, the whole team would fall apart? No. This isn't about the person. It's about a system, the entire American economic system. The responsibility of the Federal Reserve is to maintain a stable economic environment. How do they create this stable economic environment? It's through controlling interest rates. The so-called independence of the Federal Reserve means that when they decide on interest rates, they should not and need not be influenced by the president or political factors. Their task is to ensure the long-term economy of the United States is well managed. If the president of the United States controls the Federal Reserve and the Federal Reserve controls interest rates, then the president can directly control interest rates. If that is the case, what impact would it have on the long-term economic growth of the United States, its inflation, and the US dollar as a global reserve currency? The market is most concerned about these consequences. What is the difference between the US president controlling interest rates and the central bank independently controlling interest rates? You need to consider what everyone's goals are. The president or their party are politicians, and their goal is to be re-elected. If it's the first term, they aim for a second term, and if it's already the second term, like with Trump, they aim to help their party win next time. So how do you increase the chance of winning? Or conversely, how do you easily lose? If the economy is bad, people have no money, and people are unhappy, then naturally the people will choose another direction next time. So, if the economy is good, people have money, and they are happy, it becomes easier for them to be re-elected. Because there is a presidential election every 4 years, and if you count the midterm elections every 2 years, it makes the speaker or the president very focused on how Americans view him in the short term, creating an incentive. Before each election, he would make people happier, and if he controls the central bank, what can he do? He can lower interest rates or print money before the election. Imagine if interest rates fell back to zero and the stock market rose by several dozen percentage points each year, everyone would be so happy. But this is like taking drugs. It's a short-term high. If you overindulge, you will die sooner or later. In an uncontrolled environment, if only politicians decide the interest rates, their priority is to get re-elected for the next term, not the long-term health of America, because decades later, these people will have retired or passed away and won't care anymore. No matter if it's a few years, 4 years, or 8 years, if they manage to go up to 12 years, it's even better. They will continue to distribute this poison. Before every election, they lower interest rates and print money to stimulate the economy, leading to ever-growing bubbles. Eventually, they are bound to burst, and when they do, it will be catastrophic. Conversely, if the Federal Reserve is independent, their task is to reduce economic fluctuations. When the economy is too weak, they stimulate it with measures, but when it's too strong, they also apply brakes to slow it down. This reduces economic fluctuations, so even in times of recession, the impact won't be as severe. Another point is that the market is very concerned about inflation. If Trump can indeed control interest rates, even though the US is now facing inflation that tariffs might bring about, if Trump really follows through and cuts interest rates, it could cause prices to rise rapidly, inflation could get out of control, and the most frightening thing is that the market could lose confidence that the US can regain control over inflation. In fact, controlling inflation is a confidence game. Besides the Federal Reserve being able to raise interest rates to slow down the economy and lower inflation, whether it is successful or not also depends on the market's confidence in it. This includes how determined they are about this task. Historically, the US central bank has always prioritized inflation no matter how bad the economy gets. For example, in the 1970s, they were determined to endure short-term pain, even if it meant a depression, to deal with inflation first. Investors see the actions of the US Federal Reserve and find them credible. With this credibility, when the Federal Reserve says their job is to keep inflation at 2%, the market will believe them. But if they are not firm enough and merely state the task, yet every time the economy weakens, they change stance and want to save the economy first before tackling inflation, they will lose credibility. After a few failed attempts, people will question whether they truly have enough determination to keep inflation controlled at 2%. If that president, not necessarily Trump, if any president can control interest rates and they can only serve for 4 years, then their risk reward will be more short term, which might lead them to prioritize the short-term economy over long-term US inflation, thus losing the Federal Reserve's credibility. And why is this so important? Because the bond market, that is the price of bonds, is linked to inflation expectations. If investors have confidence, no matter what happens in the short term, whether it's the pandemic or politics, the current inflation rate may be compared to higher, but because the Federal Reserve has credibility, investors have confidence. Even if it's bad now, in the long term, the Federal Reserve will have the same determination and ability to bring the inflation rate back to 2%. So if you buy US Treasury bonds at 4.5%, isn't that equivalent to a 2.5% net yield? Because 4.5 minus 2 equals 2.5, right? But if confidence changes, and you are no longer certain you can control it, or now it is up to the president, whose duty is not to control it at 2%. Do you think the long-term inflation rate will rise to 3% or 4%? Then these 4.5% yield US bonds, if swapped for 4% inflation, would only actually yield 0.5%, right? Then it becomes unattractive, doesn't it? Who would still buy it? Only waiting for the interest rate to rise again. For example, if you think inflation is 4% and you want to expect inflation after to be 2.5, wouldn't you wait until it rises to 6.5 before buying? Even if the bond prices will fall, so you saw after these news came out last week, the prices of long-term US bonds dropped. The dollar fell again because the tariff war has already made the market feel that Trump wants to change the entire world's trade system, shifting the rules of the game from open free trade to protectionism. Now, even the foundation of the US government is something Trump wants to change. He has also mentioned wanting to run for a third term as president, although he might have been joking, but let's not worry about that. But now there's talk about firing Powell and wanting to control the Federal Reserve's interest rate decisions independently. Then these investors have more doubts about the entire system of the United States government and its regulations. Why has the US dollar become the global reserve currency? Besides extensive trade, one reason is its stability. For decades, it has set those rules, and there haven't been any fundamental changes. So, as a large economy, its system is more stable than many other places. But the recent events have made the market worry that the United States is not as stable as before, so the dollar has fallen. And investors in US stocks are already worried about its prospects. According to the Bank of America's Fund Managers Survey, half of the fund managers believe the US economy will have a hard landing, which is the highest level of concern in recent years. So, the market is already very fragile, and adding more uncertainty leads to a drop in US stocks by 3.1%. And where did the funds go during this chaotic time? To some assets that the market considers unrelated to politics. The first is gold, which has risen by over 10% in the past few weeks. Additionally, funds are also flowing towards digital gold, namely Bitcoin. This is somewhat surprising because Bitcoin has many narratives and different stories. Some people say it is a safe haven asset, while others say it is a risky asset. Looking back at the last cycle, from the pandemic in 2020 to the bear market in 2022, its trend was that when stocks rose, and when stocks fell, it fell. So it is definitely a risky asset. But what's surprising is that recently, when the US stock market fell, even the bond market declined, Bitcoin instead remained quite strong. After all these events, on April 2nd, the tariff war, the US banned more semiconductor exports, and now Trump says he wants to fire Powell. However, Bitcoin surprisingly rose back to 95,000, even higher than its price during the tariff war, so its recent price movements behave like a hedging asset. How will this story end? Will Trump successfully fire Powell? In fact, this is not the first time, nor will it be the last, that a US president tries to pressure the Federal Reserve to cut interest rates. Fortunately, there are laws that protect the independence of the Federal Reserve, making it not so easy for Trump to fire Powell. Even if he finds some legal loopholes, it would eventually lead to a lengthy lawsuit, so in the short term, he can't push John Powell out. The court battle will actually conclude, and the chairman's term will end next May, so I don't think there's a high chance of it happening. However, this event, like many of the recent actions by Trump, has seriously damaged the credibility of the United States. Right now, we are in a very unstable time. Trump's strategy seems to be like tearing down the order built over the past few decades, whether it's trade, environmental protection, or geopolitical relationships, and then putting it back together as he likes. Will what he assembles be better than before? And what impact will this have on our financial planning? Thanks for watching. Bye.